Welcome back. As promised, let's talk about the the new IPO which is opened up today, and that is Cash Management and Payment Solutions company called CMS Info Systems. It's about an 1100 crore IPO which is opening up for subscription today. But just a quick word about the company before we get chatting with the management. Now, this is an ATM cash management company. So money which has to get, cash which has to get replenished in all the ATMs across India on a daily basis is done by this company, CMS Info Systems. In fact, they cover about 255,000 ATMs across India, and they do this cash replenishment on a daily basis. They also provide first-line maintenance 24/7 for all these ATMs. So that is predominantly a bulk of their revenues, where the company has a leadership position, and it contributes about, what, 75%, 77%, I think, to its overall revenues. This particular, business model about the cash ATM business. Those are the other details about, the listing, where in terms of the valuations, and this is a pure offer for sale that the CMS Info Systems, the promoters too, will be paring down their stake. I think some more details, Mangalam, in terms of how many districts they cover. They break up between metro, semi-metro and rural areas.
Well, a large part of cash in the country, the people believe that is in the semi-urban and rural, where the metros are presumed to have a lot more digital penetration. So 22% of the revenue is coming from the metros, about 15% coming in from the semi-metros, but semi-urban and rural account for almost two-thirds of their overall revenue. The good part is that they're geographically fairly well spread out. Nearly 24% comes in from the north, south accounts for 26%, west accounts for 32%, and east, which is traditionally a place where the reach for most of the companies is lower, is around 18%. The important part, however, is that what we need to know from the management, and we'll be joined by them shortly, is that is there enough meat in the industry for them to keep growing, and what their current market share, their leaders, whether they go ahead and increase their market share from where they are already. Because 1100 crores of an OFS, the question is, what is going into the company? Because the entire IPO is, selling by investors and promoters.
I'm curious that how does a company improve their margins? What is the value add that you can provide? Right now you're refilling, the cash business, but how do you improve from here on? In fact, let's pose all these questions to Rajiv Kaul, the Executive Vice Chairman, whole-time Director and CEO of the company, and Mr. Pankaj Khandelwal, the President and CFO of the company. Gentlemen, it's a pleasure having you here with us. I am Reema Tendulkar. Rajiv, the first question is that, right? You've established leadership in the cash management business. You've done exceedingly well. You've covered the length and breadth of India in terms of the ATM business and the services that you provide there. But what from here on? For the next 5 years, what is it that you're targeting? Where do you intend to see your business? Walk us through the vision for the company and how this business evolves.
Reema, thank you for having us here. It's a pleasure to be here with you on CNBC today. Let me explain to you what we do. I did hear your background, and I just want to supplement the information a little bit for the sake of your viewers. What we have built is a fantastic platform for distribution and logistics and risk management on behalf of the banks and the deep interior of the countries. As your colleague said, 62% of our network is in semi-urban rural. Our bet on the growth of the company is on three pillars. The first is that India will formalize more and more in the coming decade. And as that formalization happens, a lot of currency handling will move from the informal sector into the formal sector, which is what the banks will be looking to handle it, and they'll need companies like us to handle it for them. Our cash handling involves not only just ATM replenishment, but also retail. Retail, we have more than 2,000 end customers on behalf of the banks, including all the large e-commerce platforms, which have a massive amount of business which is still cash on delivery. What we have done on the basis of the strength in our cash management network is we have expanded this into ATM managed services. Because when you and I walk into ATM and withdraw currency, it's sort of a simple transaction, but there's a lot of tech which goes behind into deploying these ATMs, into running them at the right sites, maintaining them, and also then running the software on top of them to control them, and giving the user a very good experience. Last year, in 2020, we expanded our tech solutions business further, where we started helping banks monitor remotely their network, whether it's an ATM site or a bank branch, using IoT sensors, cameras, cloud-based software, video analytics. So our goal remains to become a leader in business services outsourcing in the country. We are for the last 10 years focused on the BFSI sector, but as we have built a business which is a mix of both a platform and distribution and tech solutions, we intend to take these services to other sectors in the country beyond BFSI over the coming years. Specifically from your 5-year perspective, if I take the base of FY21 as an example, where we had close to 1,300 crore revenue and we had a PAT of about 170 crores, 900 crores revenue was from the cash management business and almost 365 crore revenue was from the managed services side. So our cash management revenue is roughly less than 70% of our revenue today. And we have won an order book of almost 2,000 crores across both managed services and tech solutions. Now, usually these are like IT services contracts. They run for multiple years. So assume they run for about 6 to 7 years average. The 2,000 crore order book could or should result in, let's say, a 300 crore annual revenue run rate for the next 7 years, which is great visibility for an incoming investor, and they can forecast the company growth. But when you take the base of 365 crores of managed services and add on this order book on top of it, it tells you sort of the growth opportunity which is available for the sector. The last thing I would like to say is when you look at the industry reports, Frost & Sullivan and others, the total addressable market opportunity which we are now working on with all these 3 different verticals is close to a 21,000 crore market opportunity in FY27. And that's the market we want to take a very strong market share position. And we were a 1,300 crore revenue last year. But if you think of the 21,000 crore market opportunity, also a market which is consolidating rapidly, I think it gives us a tremendous opportunity for growth for not only the next 5 years, but also the next 10.
Cash management business, the BFSI business that you do for ATMs, what is your market share currently?
So there are 255,000 ATMs in the country, out of which 152,000 ATMs are outsourced for cash management. The remaining are still done in-house by the banks. Out of those 155, we have, as of end of August, we have 66,000 ATMs. Our market share end of March 21 was 41%. Again, as I underlined, the market is consolidating rapidly because the network business, the scale business, people and distribution and reach will continue to do better. And we have invested in this network over the last 10 years, and nobody, thankfully, has been able to sort of match up to the depth and breadth of our presence in the country today.
All right. Just another question here. You know, the way you describe the business, it does seem a lot like the margins would pretty much be standard, right, throughout the years. Could you tell us, do you see scope for margin improvement here? And if yes, where do you think that will come in?
No, if you look at the track record of the company, right, FY19, we had a EBITDA margin profile of 19% or 19.2%. That increased in FY20. In FY21, we increased that to 23.4%. FY22, first 5 months, our margin has improved to 24.1%. So I think we've consistently been able to extend margins. Obviously, margin expansion levers are multiple. We had an acquisition in FY21. We had a mixed change of businesses as we're moving more into the tech businesses. We also had market share growth. And finally, we have driven a lot of automation within our operating system. So when you run a network of 4,000 vans, we cover 130,000 points in the country on behalf of banks every day. You have a lot of tech which goes behind running that network and that logistics framework. And therefore, automating it and driving a lot of synergy in that is something we've been working on. And finally, I think your colleague mentioned that we have 62% of our network in semi-urban rural. Now, the productivity in these areas is much lower than what we would see traditionally in a metro or a tier 1 city. And as India grows faster in semi-urban rural, we will see a lot more business coming onto an established network and established platform and delivery channels, which should give you more productivity and margin expansion. And finally, I think just the tech businesses which we are entering into have the potential as they scale bigger to deliver a much higher margin profile.
So currently we're at around 23-24% EBITDA margin. Can you tell us what do you think is this a pretty much standard level, or do you think there is scope for a lot of improvement here, and what would that level be?
Well, you know, we really can't give you a forward guidance in terms of what the EBITDA margins would be like. But I think, again, I would like to point out to the trend lines. If you look at the quality of our margin profile, the quality of our financials is akin to many leading IT services companies because that's the nature of businesses we do in the tech side. And our cash management platform is sort of running very well with very high market share. I feel that our margins over time should hopefully grow as we continue to expand and deliver an order book. Also for incoming investors, a good thing is that in the last 3 years, the company has invested close to 300 crores of capital to drive and execute this order book. And as the capital cycle peaks, we should get the returns in the coming years, and that should also help in the overall revenue growth and profit growth of the company.
Pankaj, why didn't the company look to raise money which will go into the company via a fresh issue? And if you could also elaborate a little bit more about the cash handling work that you do for retail customers, for your e-commerce clients, and how you can scale up that business.
Sure. So this is a OFS of around 1100 crore rupees. If you will see the company's history, since inception, the company is a profitable company. For last several years, company have no debt. As on 31st March 21, company has a cash balance of around 306 crore rupees. In last 3.5 years, company has invested over 300 crore rupees for various capex investment. We have about order book of around 2,000 crore rupees, which we are investing. So company have a net worth of around 1,000 crore rupees and AA rated. So we feel that right now company is well capitalized and have sufficient funds available for us for the future growth.
And about the work that you're doing for your retail customers, e-commerce clients, and how you can scale that up?
About that answer, if I look at the overall retail market in the country, we estimate this to be almost like 4 million points. Out of these 4 million points, today the penetration level of companies which are doing cash management work with the banks is not even 100,000. It's like 110,000 points. So it's a very small fragment of the industry. In fact, when you compare us to some of our global peers, in both the developing markets and the developed markets, a large part of the cash management revenue comes from retail. However, that opportunity in India is still smaller relative to the ATM opportunity simply because formalization of the economy. India is a very large informal economy. And as the government drives various initiatives to help formalize the sector, whether it's GST or other initiatives, we think there will be a market share shift to organized sector. That is led by e-commerce, that is led by large retail chains, that's led by large NBFCs. And we work closely with all of them along with the banks out there. The work we do for them is to make sure that we are able to handle the cash which they collect on behalf of the clients who come and spend with them or who come and deposit the money for them across the length and breadth of the country. Managing that entire cash value chain in a safe, secure, efficient manner and giving them the credit of the money quickly so that they can get the money into the treasury quickly is something which CMS prides itself on. And that's a very high quality offering we offer to these companies so that they don't need to invest into systems and back-end processes and infrastructure to do it on their behalf. So that's what we do. If you look at the cash e-commerce companies specifically, that's a very fast-growing sector for us because a large part of e-commerce deliveries are still cash and delivery across the length and breadth of the country. And when that cash comes back to the depots and to the branches, end of the day, that money needs to be safely managed, accounted for, and credited back into the companies. And those are areas where companies like us play a very key role in helping them manage that entire value chain very efficiently and across the length and breadth of the country.
I think we take your point, you're looking at a larger addressable market here as well over and above what you're currently doing where you are the leader. But, as you look at increasing your addressable market, the competition increases as well. And I'm sure you're not the only person offering such services to the e-commerce players. So there would be a lot more people who are entrenched in this business firmly well for you to, just come in and take away the margins and market share from them. So competition is something that I'd like to know from you. And the second thing, when you keep talking about formalization of the economy, chances are that the way UPI wallets and digital payments are also reducing the need for cash. This could still be an industry which will grow at a lower pace as against what one is anticipating. Is that a risk?
So, both very good questions. Let me explain the first competition question is a little more complex answer because we play in various verticals, right? We don't have one line of service only. If I look at the traditional cash management business, our competitors there would be a company like SIS ProSecure, it would be Writer Safeguard, it would be AGS Secure Value, it would be Radiant Cash Management. If you look at the product automation side, our competition with global OEMs like an NCR or a Hitachi. If you look at ATM managed services, again, the competition would be a company like NCR or Hitachi or FSS. When you move to software for ATMs, it's mostly NCR or CMS. And then when you switch into our remote monitoring business, that's a new fast-growing tech SaaS play There are few VC-backed companies which have set up shop in the last 3-4 years. But with our quick order book wins of almost 400 crores, 15,000 sites, we are clearly becoming a market leader in that segment. Now, having said that, that actually tells you that there is competition in different sectors. What is unique today for us is that we are the only company I know of globally which has been able to take a very strong physical distribution logistics moat, which hasn't been replicated in the country by anybody till now. And we have added on a layer of service and solutions which we integrate from cash management, cash distribution, cash recovery, and all the way up to software and remote monitoring. So it's a full stack offering. We look at the fact that we don't compare ourselves to anybody in the world. We sort of look at saying, what do banks need help on? How can we help them? Build scale. Our strategy is, what business can we be number one in? How do we run a profitably growing business which can generate sustainable margin profile? And that's what we have done. If you look at the past 10 years or the last 3 years, that's what we have historically done. CMS started actually from being an IT maintenance company, moved into cash management, expanded into ATM managed services, then grew into remote monitoring solutions. And in the next 5 to 10 years, we'll, I'm sure, launch new lines of businesses as we continue to partner with banks in helping reach the end consumer more effectively. Coming to a second question, which is about as there is more organized retail or there is more formalization, the formalized sector will use a fair amount of digital. Absolutely fair. I think the point is when it is informal sector, we have no play. Right? We have no play. We have no way to tap into the informal sector. There is no revenue growth or opportunity or penetration for us. Our opportunity arises when the sectors start getting formalized. When they get formalized, there will be a share of transactional commerce which will be digital. And digital has many forms, from the wallets to UPI to NEFT to RTGS to online to whatever it may be. And there is cash. And I think the fact that we can get more points, our growth comes from handling more and more outlets and points rather than the physical amount of cash we handle.
All right, take that point. Thanks a lot, Rajiv, for joining in, giving us all those details. Pankaj as well for talking about your business going ahead. Wish you good luck for the secondary markets, and let's see where it goes. We'll have a longer conversation once you guys list and can talk some numbers as well. We'll take a short break, get you some more on the markets on the other side.